In the global financial markets, gold has always held a very special status. It is not merely a metal, but a symbol of economic security, wealth preservation, and national financial health. For centuries, individuals, governments, and institutions have relied on gold as a hedge against uncertainty. But today, something unusual is happening. Gold prices have declined sharply worldwide, triggering discussions, confusion, and in some places, panic. Many investors, especially in countries like India where gold holds cultural and emotional value, are now trying to understand what this sudden fall really means. In today's analysis, we will take a closer look at the factors behind the global gold price crash, how the financial markets are responding, what international central banks are planning, and most importantly, what impact this could have on the common person, particularly in India. The decline in gold prices is not an isolated event. It comes at a time when global markets are navigating multiple challenges. Inflation has been stubborn in major economies, interest rates have risen consistently in regions such as the United States, Europe, and parts of Asia, and stock markets have remained volatile. Typically, when uncertainty rises, investors rush towards gold. But right now, instead of increasing, gold prices are falling. To understand why, we need to step into the worldwide financial environment. The U.S. Federal Reserve plays a major role in global economics. Whenever the Federal Reserve increases interest rates, the value of the US dollar strengthens. A stronger dollar usually puts pressure on gold prices because gold is priced in dollars internationally. When the dollar becomes expensive, gold becomes costlier for investors who use other currencies. This reduces global gold demand temporarily, and prices start correcting downward. Another reason behind the current decline is the changing investor sentiment. Over the last few months, many investors have shifted the capital from safe haven metals like gold into equities, government bonds, and particularly the rapidly expanding technology and AI sectors. The stock markets have shown strong momentum, especially in the United States and South Korea, where tech companies have reported strong revenue projections. This shift in investment strategy is making investors temporarily move away from gold. This doesn't indicate that gold has lost its long-term importance, rather, it shows that institutional investors are taking advantage of short-term profit-making opportunities in other asset classes. Central bank policy is also playing a crucial role. Over the last 2 years, several central banks including those in China, Turkey, and Russia have been aggressively buying gold to reduce dependency on the US dollar. But recently, some of these central banks have slowed down their pace of gold purchasing to stabilize the domestic currency and balance trade deficits. This reduction in bulk buying has temporarily impacted gold demand globally. Moreover, many Western institutional investors had previously accumulated large gold reserves during pandemic uncertainty. Now, as economic conditions appear slightly more stable, some of these reserves are being sold off to rebalance investment portfolios, contributing to the downward movement in gold prices. However, the decline in gold prices is not uniform across all regions. In India, the market reaction has been slightly different due to cultural and seasonal demand. India is one of the largest consumers of gold in the world, largely due to weddings, festivals, and long-term family investment traditions. Even when global gold prices decline, local taxes, import duties, and currency exchange fluctuations often cushion the fall. But with international prices dropping significantly, Indian buyers might soon see noticeable price reductions if the trend continues.